Welcome to Hot Topics on the Edge of Show. I'm January Jones, joined by my co-host Richard Carthan, and today we're joined by Josh Lawler from Zuber Lawler. Welcome again to our show, Josh.
Thank you, January. It's a pleasure to be here, as always.
Well, it's great to have you, man. And coming up, we're talking about Bitcoin reserves go global, the best performing crypto of 2024, SEC delays, and expectations for regulations in 2025.
This is another production of Edge of Company, a rapidly growing media ecosystem empowering the pioneers of Web3 technology, culture, and innovation.
Let's get into it.
Our first topic today is all about the global momentum surrounding Bitcoin reserves. Politicians across 5 continents are arguing that Bitcoin reserves could benefit their countries. This includes the US, Brazil, Russia, Switzerland, Poland, Germany, South Africa, Japan. All are considering pursuing Bitcoin reserves. Richard, we've talked about this before on Hot Topics, and it continues to gain momentum. What are your thoughts on this?
Yeah, I think it's really awesome. We had a couple years ago where people in South America decided to be the first ones to get this going, and it's completely changed their entire GDP over the course of just a few years. And now with changes in administrations all over the world, people are leaning into Bitcoin, and of course with the passing of Bitcoin ETFs. It makes it a lot easier for a lot of this traditional money to flow from traditional markets into Web3, so accessibility and understanding the legalities of getting involved into this asset class, which is Bitcoin, it has a spotlight on it. And I think it's really awesome to see this many countries, and a lot of these are large companies, some of the superpowers in the world. And as soon as a few of them start to turn Bitcoin into a reserve, I think it's just going to be dominoes that fall. Josh, what's your take on this?
It is super, super interesting, to be sure. If you think about the United States and how much Bitcoin they would need to have to hold in a reserve in order to move the needle, it's an astronomical amount. It's hundreds, if not thousands of times the current market cap of Bitcoin, probably thousands of times the current market cap. That's just the United States. That doesn't get into Russia and China and everywhere else. If you've got an Ecuador or an El Salvador or, a Kenya or anywhere else that, I know is talking about it, they need a lot less to move the needle. But the kind of funny piece about it is it's also something where every single country has got to look at the fiat currency situation, recognize that, we've kind of had a race to the bottom from an interest rate perspective. We've got, kind of a inflation situation across all of it. And, the only uncorrelated currency, if you will, is Bitcoin. And there's a lot of different tokens, obviously. But, as far as not being something that, floats against the dollar, most other Forex, they tend to have some level of correlation to each other, and the governments can fight with, setting interest rates and trying to create situations so that they're going to have more exports than imports and things of that nature. But the thing is, the more that jumped onto Bitcoin, the less power they're going to have to do that. If you remember when Facebook was coming out with Libra currency several years ago, which was going to be, a stable coin, stable-ish, backed by a basket of international currency. And the United States just jumped right on top of that and squashed it. Part of the reason for that was because if you make something that is as widely distributed globally as Facebook is, that has this currency that blunts the effect of any economic regulation that any government might do, it takes a lot of power away. So you're in this weird kind of situation where the governments don't really want to do it, but at the same time can't not be on that particular bus because, in the event that we have a massive escalation in the value per Bitcoin, which, is incredible to predict, you can't not be there. You just can't not be there. So it's going to be interesting, to be sure. Closer to home, a lot of states are also talking about the strategic Bitcoin reserve. New Hampshire has actually already voted to do it, I think. That's super interesting to me, and possibly maybe even a little more so just because the numbers don't have to be as big to move the needle. I'm sitting here in California where we just had a whole bunch of wildfires that are going to do I don't know what to our state economically. Would I like California to have a strategic Bitcoin reserve just in case that were to, I don't know, triple, go to 300,000? Of course, I'd vote for that. Do you stick it as a constitutional ballot referendum? I'm in. And I think a lot of people are. So there you go.
I think so as well. I think just one more thing I want to add to this is just from like the logical line of thinking with what does it mean if these states in the United States and other countries are starting to have this longer term vision of reserve for Bitcoin? That means they're pricing in like the at the time of this recording, the price of Bitcoin is close to $100,000. That means that's the floor. That's the starting point for a lot of these people who are just starting the game, which is wild, right? And if the idea is that it's going to continue to go up, and if ideally you're getting into something that's going to 8% year over year, et cetera, like the upside for what could happen if this really starts to be implemented is astronomical. So again, not financial advice, but just like logical, like calling it for what it is. Like 2025 on could be insane.
Yeah, never financial advice to be sure. The other piece of this that, just as we're talking about it occurred to me is that if you have governments make a strategic Bitcoin reserve decision, it follows that they may also start making other decisions that may or may not be helpful in terms of wanting to make sure that mining runs a certain particular way, and kind of protecting that kind of area, which is difficult because it's decentralized, obviously. So, does the United States get too upset if too many nodes are in Russia or China? It's hard to say. And at the same time, if we have a strategic Bitcoin reserve and China doesn't, is it something where if they get upset with us, they try to crash the system? We also, especially with quantum computing coming online sometime in the next 10 years, it's a lot to think about.
Yeah, definitely.
Yeah, it is. And just a follow-up question, Josh, do you think that other regions in the world, though, are better set up to embrace this idea of the Bitcoin reserves? Because we know there's barriers to it in the United States as things are now.
Yeah, I mean, I think the smaller government that you're dealing with, the easier it's going to be. And also, like anything else, the more legacy kind of infrastructure there is, the harder it is to kind of escape velocity over that for, a lot of administrators, for no reason that's, horrible or evil or anything else. They just know what they're used to. And that's what they want to stick with. So, if you've got situations like, South America and Africa, where there are countries that already, have issues in terms of GDP and have all kinds of issues with the currency system and everything else, for them, it's almost a no-brainer. It's like, okay, we can adopt this thing that's got some kind of like global acceptance, which by the way means that they don't have to do all their currency exchange transactions through dollars or euros, which currently is the case and costs funds from that perspective. Also, it just becomes much more efficient. So yeah, I mean, I imagine we're going to see that in many of the kind of smaller kind of country economic systems than before it shows up here.
Well, it's an exciting time to be in this field and also to see what happens in 2025, right? Because on this show, we're always talking about a milestone or a new first, and here we go again. Well, our next topic, we're going to talk about the top performing cryptocurrencies of 2024. And actually, the top one was not Bitcoin. While Bitcoin did have an impressive year, there's another one, virtual protocols. They stole the show with a 23,000% rise. So virtual protocols is the blockchain platform for launching AI agents, and they function autonomously. So it is driven a lot of revenue, and its valuation is about $4 billion right now. Richard, do you use AI agents? And what's your take on the impact they're having in the crypto market?
So I currently am using AI agents. I am not directly using them in blockchain yet, but I am one of my goals of this year in 25 is to figure that part out. There's a lot of projects coming to the surface that are building this right now just because of how successful Virtuals has been. But even with what Virtuals has made, there's a framework to do all kinds of things off of it and be more niche, more focused on just certain areas of these different AI agents. And so I think there's going to be a lot of opportunity around this. I mean, the fact that these AI agents can operate autonomously and do tasks like analysis and gaming enhancements, and like you want to do a specific like trade, and you just give the command and it goes and does all the steps that makes crypto super hard easy, and then to be able to do it quickly, like that is powerful. And so I think it's advantageous to learn how this stuff works, be at the ground floor of this, because there will come a time where like this is the norm in the standard in how a lot of people trade or look at different opportunities, but we're not there yet. But obviously, like with this high performing type of crypto, people are spending a ton of time on it. And from the VC side, a lot of people are investing in this side because they see the opportunity that is the intersection of AI and blockchain. So I definitely have a ton of attention on this. Josh, what's your take on this, and what do you think are the legal ramifications potentially that come with projects like Virtuals?
Small question. Thank you for that one. Yeah, so I agree with you. This is the story of 2025. It's been building for a while. We have actually several clients that are kind of in the space. They're the confluence between blockchain and artificial intelligence, and we have for quite some time. There's a company, Akid AI, that we've represented for 5 years, and I contacted their CEO, Brandon Cooper, a couple months ago. It was just kind of like, okay, fine, you're right. You're totally right. He's been there the whole time. Virtuals, I think they actually doubled over the last 3 days. Was speaking with somebody else who was pointing them out, and I remember looking at them when they were bankless speaking and permissionless speaking. And at that point, nobody knew. Nobody knew. And that's just back in October. It's a very hot area. There's a lot of people chasing the ball. That's kind of as far as predicting what's going to do well and what's going to not do well, which is something I try to avoid anyways. There are a lot of folks chasing the ball, so you don't know what's necessarily going to hook on as usual. Marketing and rollout is as much of it as technology is. We have one of our clients, Twin Protocol, just did their launch event about a month and a half ago. And they're very interesting also because you can set up an agent that is your twin to kind of do things the way you would normally do them. It's very celebrity and professional oriented. At our firm, we're a medium-sized organization, and I'm fighting like mad to have us adopt as many agents as we can. It just makes life so much easier. To your point on the trading piece of it, yeah, I think it's also massive. And there's a lot of folks who are coming out with, algorithms at this point that they can back test very easily and kind of go, okay, this is what would have happened over the last 3 years, and, push a button. And the holy grail really is set it and forget it. I know that I unfortunately execute like a complete idiot. If I touch a keyboard, it almost falls apart. So, even though I do a lot of work in this space legally, I don't do that much in terms of trading and assets. So I'm dying for this. Take the difficulty out, no question.
I can see that it does take the barriers to entry out, but where's the human savvy in this though? So using these agents, setting them up, what do people need to know about from your guys' base of knowledge to make sure that they're doing it correctly and kind of having a little oversight?
Well, that's a great question. And, when I said it was a small topic, thank you. That's part of it. Just from a theoretical perspective, if everybody's trading with AI agents, I do wonder what that does to the market if, all the AI is pulling from the same data pools. I think the setup of it does require expertise. And again, using myself as an example, I execute like an idiot. Would I go off and try to figure out what the right artificial intelligence agent is just on my own without, anybody who knows what they're doing kind of instructing me? No, absolutely not. It seems like, a great way to lose a lot of money, or possibly you do something where you start with it and you give it, $100 equivalent to play with, some amount that's just like not going to hurt too much if it just goes away, and see what it does. But the other piece of it is there is at this point, I think, always going to be kind of a bleeding edge, and virtuals is a good example of it right now. A typical kind of cryptocurrency trader who's looking at the coin market cap top 200 or whatever may not have found them before the spike. But somebody who's a technologist looking at artificial intelligence and kind of going, okay, we've got Fetch AI and Singularity and Ocean doing their thing. We've got Morpheus going and doing that thing, and so much attention on it. If you can have an AI bot that is looking for those opportunities, independent of any trading patterns, for instance, that might work. And that's something where I think there is maybe some human nuance in it, at least for now. I mean, obviously as the AI develops, it is going to get smarter than us really fast. So
my very quick take on this is prompt engineering. Being able to give the best prompts to get the results that you ultimately want. For those who aren't potentially using AI right now, for like ChatGPT or Perplexity, some of these others that are out there, getting good at these prompts, I imagine that a lot of ways the intersection of blockchain AI will be similar, where you're literally just giving specific prompts in order to achieve an end result. So if you can practice your skills on that right now, I think that's probably a good first step in getting yourself ready for this next step.
I think, in terms of understanding the theory, sure. I disagree with you in terms of the long-term requirement on prompt engineering. If you
for long-term, yeah, I'm saying for
long-term being like a year and a half. If you look at even Perplexity now and kind of the ease of use of that compared to GPT 2.0 when it came out, it's night and day. And we're quickly getting to a point where the artificial intelligence is abstracting the prompt process away from people, so you can have AI that creates the prompts that are required in order to get to the point of what you're trying to get to. It's interesting to be sure. Anyways,
definitely.
Well, moving on, let's talk about the SEC's decision to delay the review of Bitwise 10 Crypto Index ETF. EFTs have been a gateway for traditional investors to enter the space. And now by delaying the deadline to March 3rd, is the SEC signaling anything? Josh, what do you think?
Well, we've got a change of administration happening 4 days from now. I'm puzzled by the SEC's actions leading up to that. You've got the delay. I think the delay in that particular ETF is because they don't want it on their watch, honestly. It's not kicked out very far. March is just around the corner. New administration comes in, has different thoughts on, what the assets that ETF may hold will qualify as, and how it looks. And I think that, that's kind of maybe one of the smarter decisions that they've made the last 2 days compared to things like sending CyberKongz a Wells notice that was, entirely conclusory, just saying, hello, Web3 games. If you do NFTs and you have a fungible token, you're violating securities laws. It's a little bit of an exaggeration, but it's close. Or for that matter, the Ripple filing of their appeal brief, which happened yesterday. And okay, fine. Timing was that's when it was supposed to be, but they could have petitioned for a very short delay just to potentially not cause all kinds of expense and frustration. So it's going to be interesting. Gensler's stepping down. All the Democratic appointees from the last round are going to be gone. So we don't necessarily know what's going to happen, but I'm definitely not reading anything into kind of these last moves.
Yeah, I think it's interesting, and I think they're going to have to keep evolving this, because when you think about like a bucket of the top 10 cryptocurrencies by market cap, 2 of them are stable coins, right? You have Tether and USDC in there, and then you have other products like Tron and Cardano and a few others that, when you think about like your bucket of what would be in there, like what are the real ramifications of that? So I do think there's way more to observe as they consider what is like a top 10 index look like. I think there's probably other ETFs that probably have to go live and be accepted first before you kind of start pulling them all together. But I am curious to see how this ultimately lands. But yeah, it makes sense that they delayed until the change happens, in my opinion.
Well, relatedly, Josh, getting into kind of a final topic, let's talk about where you see the future of this regulations going. Without naming names, getting too specific, there's a lot of hope and promises, and people are kind of holding their breath. So, what do you think is going to happen in this space?
Well, per se, I can't wait to stop holding my breath. No, it's that's a question I think I probably get 5 times a day, and lots of our clients are all in the same position with the new administration coming in. There's a lot of hope, and there's a lot of kind of people trying to get ahead of that. So the law hasn't changed. The people enforcing the law has not yet changed. As we just mentioned, they're doing some silly things, in fact. But because we've got this on the horizon and people are expecting change, there's a lot of interest in the space. A lot of different projects are trying to fundraise immediately. A lot of money is now looking to jump into the space. It definitely looks like we're at the start of a bull cycle. From a legal perspective, I think, some people are saying the SEC drops everything that doesn't involve fraud. That's kind of a little bit of a weird statement because, they either are or not going to have jurisdiction. And if they don't have jurisdiction, they're not the right ones to enforce fraud anyways. But, from a flavor perspective, I don't mind the idea of, if you're doing what you're doing for good reasons, not ripping people off, not giving them enough rope to hang themselves, not engaging in, insider trading-ish type transactions, that seems like that's going to get a little bit of a pass for a bit. No way to predict it. That scares me a great deal, actually, because I do think it puts us back into 2017 zone where, you're going to have a lot of people come out of the woodwork with a lot of bad ideas that, can get funded and kind of jump. There's definitely a movement towards, doing transactions with pre-sales that don't have lockups. And that's a really horrible idea just from a tokenomics kind of market management perspective. But of course, it's also a securities law issue in the United States. But that's what 2017 was. It was the big discount, short-term wait for TGE and then dump, and everybody on the retail side gets killed. And I do think we're probably going to see some of that. I think the CFTC is likely to get much more active. They've been really good about having a level of restraint in terms of not going to enforce things where maybe somebody would have needed a license, but there's no path to get that license. But they have made some noise about going after spot market manipulation and fraud. And there's not a lot of that in the United States history. Like if you do research on it, you're only going to find like a few instances where they do that. But the kind of practice of having somebody who is called a market maker that then, inserts liquidity into the market to maintain, a particular floor price effectively, even if they're not calling it out that way, that is artificially maintaining a price of a commodity. And that does fit into the market manipulation category. So that's one that we're really very concerned with. And we think in 2025 that, while the security stuff may back off, that will be an issue. And then the other one, which is kind of the most, boring and esoteric topic of all, is tax. We are super concerned with some of the positions that the IRS has taken in terms of how things are taxed. There is a lot of gray area, a lot of, questions, a lot of things where, if you mince your tokens off of a smart contract, but distribute them partially out of a U.S. entity to sell into the United States and partially out of a foreign entity to sell to everybody else, from a tax perspective, how does that work? And notably, if we see the next administration put tariffs on digital assets, which is tough to do, is it going to be that we need to just sell them out of the United States, or did they have to be, quote, minted here when, we know minting doesn't actually happen anywhere. It happens in cyberspace. I mean, somebody can be someplace pushing a button, but it's irrelevant where that is. So that's going to be an interesting one to be sure as well. But, I'm looking forward to it being a great year. I'm super excited about it.
Well, as a follow-up to that, you mentioned people with a lot of bad ideas. And it made me think about the crypto kind of regulations moving into the legislature now versus the SEC doing this through lawsuits, right? So
Yep.
That's a can of worms, but I think we can't deny that that's coming down the pike. So, generally speaking, how do you see that shift happening? Because, I'm starting to see more political organizations coming up, right, that want to influence policy. Crypto PACs are popping up all over the place.
Oh yeah, well the PACs are huge, and there was more money from this industry into the last presidential election than there was from pharmaceuticals or power or energy, which is just a crazy statistic if you think about it. Just like 0 to largest lobbying group. In terms of Congress, it's amazing watching that process of the sausage getting made. Is a truly scary thing. What really concerns me most is that I don't know that any of the folks in the legislature who are working on this stuff have a really solid top-down view of the technology. You've got the fintech folks who are looking at it from a financial perspective, and they want to regulate things, based on that. And that doesn't really work so well for, Web3 game developers. You've got, people talking about it as if it's a security all the time because they haven't figured it out yet, but like, we're going to loosen up the laws on securities. That doesn't really work either. I mean, it's an extremely profound and hard to understand technology at the top level. So, my concern is that they are going to put stuff in place. They definitely will. Whether it's going to be fitting, that's another question. And then, the other giant question mark is decentralized, whatever, DeFi, DeSci, DePIN, whatever it is, because there's just no precedent for regulating decentralized activities. And right now what we say is if you operate a front end into something, you're responsible for that. And, that makes all kinds of sense. But, if you have, something put out onto a chain and it's out there forever, nobody's necessarily regulating that. Nobody has control over it. So what does the government think of that, or the various governments? And nobody has an answer for that. We're kind of, it'll be nice to have everybody understand the problem. And I think right now, especially with some of the congressional elections also, there's a lot more interest in understanding the problem. And I'll give it that. From that perspective, there is a reason to kind of have some level of positive thoughts, because they are definitely trying. And that's maybe a little bit of a change of pace.
Well, that's what we're doing on this show too, right? And that's why you're here on Hot Topics, kind of breaking this down, because the idea is to get people to understand what's going on. Because, we're supposed to be just a step up, from our representation as the general public. And so how the public is educated, what their understanding of this issue, is a direct correlation to what's going to happen in our culture and in our legal system.
Yeah, I love that. That's so dead on. It's one of the, I love the Web3 gaming space because I do view it as kind of one of the easiest pathways to kind of popular adoption. And, it's like driving a car. You don't have to know how the engine works, and we shouldn't try to explain to every Web3 gamer how, blockchain works necessarily. But it's great for them to know that it's there, and particularly when you get into situations where they can own their own assets, which, is a major kind of thing from an economic perspective, and changes the face of everything. And again, makes it hard to regulate. But I think that's a gateway towards adopting the technology in more kind of weighty and important areas of, governance and things of that nature.
Absolutely. Well, Josh, we really appreciate all that insight. And of course, for everyone that's listening, we're wrapping up today. Really awesome conversation. We covered the momentum behind Bitcoin reserves, Virtual's protocol, explosive rise, the SEC's crypto ETF delay, and the future of digital assets regulation. We'd love to hear your thoughts. Please connect with us on social media or drop us a comment.
Thanks for tuning in to this week's journey through the latest topics in Web3. We love exploring these with you and bringing on our guests like Josh, who can really give us context. I'm January here with Richard, signing off. Stay curious, stay innovative, and we'll see you next time.